Hello, welcome to our channel. Today we are going to be talking about taxes and what that means as a small business owner. I know a lot of us, including myself, started this business on a whim and a prayer and a hoping that it would take off into something that would be life-changing for us and our families. And somewhere along that journey, we kind of had a panic moment about what should we be doing for taxes? Is there something I'm not doing? Am I covering all my bases? How much should I be setting aside? Should I be paying these now or later? So in today's video, we're just going to scratch the surface, kind of do a broad overview of what taxes should look like as a small business owner. So welcome to our channel. My name is Katrina. My business partner Cheryl and I run and own Empower to Profit, where we help small business owners take home more revenue so they can enjoy their life. So let's hop right in. We're going to be talking about these taxes. What does this mean for you? I'm sure most of us came from the 9-to-5 world where we go to work and they automatically pull out our taxes. They make sure all the boxes are checked and everything is paid and we're good to go. And then we file once a year. And then if we get money back, great. If not, oh well, sometimes we have to pay, but we don't really know what happens in the background. Well, when you become a business owner, these things are now your responsibility. And most people don't know what that means. And it can be really overwhelming to try and understand what that looks like for you. So the first thing that helps when you're looking at this is to kind of break it down. So you as a business owner, I'm just going to say right off the bat, you are required to make quarterly tax payments to the federal government. If you're not doing that, please pay attention or even stop this video and go Google it, because you should be paying those quarterly taxes. So when you were in your 9-to-5 job and you paid Medicare and Social Security, those are things that these quarterly payments are going to be paid to. So every business has these tax requirements so you can avoid the penalties, because these penalties can cost you thousands. And if you're not doing these quarterly taxes, or if you pay them late, you could be incurring some of these penalty fees, which you don't have to be paying. If you just pay them, then you should be good to go. Now with these quarterly taxes, if it's your first year in business, then you aren't required to pay these. I would highly recommend setting money aside into a separate bank account so you're prepared to pay these at the end of the year if you owe any, and you probably will owe some if you make a profit. But you aren't required to make them quarterly because there's no information to go off of with the federal government. So once you make that first year of business and you're going into your second year of business, a couple of things can happen. Your CPA will either give you vouchers. This will have the amount on it that you are required to pay to the federal government, but that amount is pretty much based off of what you made the previous year. So if you're making a lot more money in your second year of business, you are going to be responsible for more than what that voucher includes. So just something to keep in mind. And if you're not sure how to get started, I'm going to reference this a couple times. There's information on the federal website, and there's a lot of information on your state-specific website about how to make these payments happen. So there's lots of information out there. You just have to go seek it out. So a good rule of thumb when you are a business owner is to set aside 15 to 30% of your profits for tax savings. And I know that feels like, or it can feel like, a huge chunk of money, but trust me when I say it's better to have that set aside in a bank account waiting and ready to be paid than when you get hit with a $15,000 tax bill at the beginning of the year. Ask me how I know. So again, you have these federal taxes, and then you also have state and local taxes, which can be your county taxes or your city taxes. And again, the best way to find out specifically for where you are is to hit up your state website, because they're going to have all the details, all of the percentages, all the specific directions, because we are probably all watching this from a different city in the United States, and all of those cities have different requirements. So I can't sit here and trying to explain specifically every city what you're responsible for or not responsible for. So please, I will drop a great link in the description of this video where you can kind of start your search, and that will lead you to the right spot. But so the next thing I want to touch on is sales tax. This can be a little bit tricky, and it takes some organizational skills to know how to do, and every state and county, again, is a little bit different. So it's important to get a little bit of information, maybe a little bit of education, or a little bit of help. A lot of CPAs are very comfortable doing this. We do this for a handful of clients. Some accounts are easier than others. So first step is get educated, have someone walk you through it, and then decide if you want to do it or pay someone else to do it. So for sales tax, I'll use Florida as an example because that's where I'm based out of, and I'm comfortable doing sales tax in Florida. But in Florida, business owners have to pay sales tax on basically what the state decides you need to pay sales tax on. So a lot of services, such like that, you don't have to pay sales tax on, but goods or products sold, you do. So the best way to go about that is to know how much money, what the percentage is for your state, and then to look into your city or county and if they require or have a sales tax rule as well. And then when you log onto your state website, it will give you a breakdown of how to fill that out and submit it and pay it right online. So once you get a good system and rhythm of how this is done, it's actually pretty easy. But to go into it the first time around, not really knowing what you're looking at or how to fill out the forms, it can be a little bit confusing. But it's important to have good bookkeeping and good records, because this is where you get those numbers from. At the end of every month, you have to have your P&L statement to know how many sales you sold, how much sales tax was collected, if you have any thing that you can write off for the sales tax, for example, like sales tax you paid, stuff like that. Those are all details you're going to need to know to complete the worksheet for the state sales tax information. So we can do a separate video about that for Florida specifically if anybody's interested, and I can walk you through the sheet and how you can get those numbers. But that's pretty much encompassing taxes and how federal, state, city, county taxes work as a small business owner. I'm going to link a great website to kind of get you started on where you can find information for your city and state specifically. But if you guys do have any specific questions, feel free to leave a comment below. I'll be more than happy to answer those for you. I know it can be a little bit overwhelming. There's a lot of information involved, but I hope this was helpful, and I hope you guys are killing it with your businesses. And as always, cheers to profit.